Hi guys, in this video I'd like to share with you guys how to do some of the Thinkorswim settings and also how to buy shares, sell put, sell call, and also buy leap call. Okay, and some other explanation about the Thinkorswim rules and also what not to do. Okay, so first of all, go to the top right hand side, hover your mouse over here and then click on it and click application settings. So the first thing you want to do is click order defaults. Okay, and then the second thing you want to click is options and then change this from 10 to 1. Okay, 10 to 1. This one as well, from 10 to 1. So every time you want to sell put, sell call, or buy leap call, by default it will be one contract. Okay, if you do not do this setting, that it will be 10. So it could be dangerous if you miss out on this number. Okay, because 10 contract is not small. Okay, so if you're starting out, if your portfolio is small, then you might want to change this from 10 to 1. Okay, until your portfolio size is big, then you can change this to maybe 5 or 10 and etc. Okay, and then the other thing is click system and then change code speed to real time no delay. Okay, so that the code that you'll be seeing will be real time. Okay, and then your portfolio size must be at least 2.5k US dollar to have the live data. If it's less than 2.5k, you will have this delay. Okay, even though your portfolio is 2.5k and above, you still receive delayed data even though you click real time no delay. Then email or call TD Ameritrade to fix this issue. Okay, the best is to call them. Okay, and then the third one is look and feel. You click look and feel. You can change this color theme, dark, light, and etc. Okay, I prefer dark. And then for font size, if you feel that the font size is too small, you can change to larger, very large, and etc. Okay, and then once you're done, you're happy with the setting, just click apply settings. Okay, so once you're done, click X. And then another thing that I want to bring your attention to is this cash and sweep vehicle. Okay, so if your cash and sweep vehicle is $10,000, means you have $10,000 cash. If your cash and sweep is negative 1,000, it means you owe TD Ameritrade 1,000 US dollar. It means you are using margin already. Okay, so two things you can do: sell your stock or liquidate some of your position to pay back this 2,000, or you fund in at least 2,000 to pay back TD Ameritrade. This is the only two things. So always remember, look at cash and sweep vehicle. Then this is the number you want to see to know how much cash you have. Okay, net liquid is the amount where if you liquidate everything, your stocks, your sell put, your leap call, whatever, and then how much you get back. So this is net liquid. Stock buying power and option buying power, do not need to worry about it because you are not encouraged to use margin. If you use margin, this is the thing that you need to watch out. But I do not encourage you to use margin at all. No matter your skill level, do not create the habit to use margin. Although it's just, let's say $500, $1,000, $2,000, it may be small, but you will be creating this habit of borrowing money. Okay, so do not do that. It will throw your logic out the window, and then you have sleepless nights, you know, and you will underperform. Okay, so do not put yourself into that pressure of buying stocks or even do leap call using margin. Okay, or even sell put. All right, and then also initially, right, when you open up your Thinkorswim, you will see this. So to me, these are noise. Okay, so Normally, I do not want to see such things, so I just click this to minimize it. So it will look like this, okay? And then the other thing is that over here, you might see day trades left, okay? Day trades left. So if your account size is less than 25K US dollar, they don't encourage you to day trade. So they actually restrict you from doing day trading with your account size below 25K. Okay, so there will be a limit. So they limit you to 3 intraday trade at maximum per week. If you do more than 3 per week, they will suspend your account. Okay, they will investigate things like that. Then it will be a hassle to allow, to let them enable you to trade again. So please do not day trade if your account size is less than 25K. I do not encourage as well if your account size is bigger than 25K. Because for me, long-term investing or trend trading will do much better than those who attempt to day trade. Okay, so what does day trade means or intraday trading? Buying now, sell 1 minute later. Buy now, sell 10 minutes later. Buying and selling within the day is called day trading. So TD Ameritrade do not want to don't want you to day trade and risking your account. Okay, so they discourage that, so they don't allow you to do that. So take note of this. Okay, do not day trade. So they actually show you if your account size is less than 25K, they will show here day trades left. So if that, so normally it will be 3, right? So they will limit you to 3 times a week. So if do not utilize that, okay? So when you want to buy stock, okay, when you want to buy stock, just click ask. Just click ask. So you choose, you type the quantity you want to buy. So let's say you want to buy 10 of this stock. Okay, you set the price yourself or market price, and then click confirm and send. Make sure you read the order description always. Okay, buy 10 SE at this price to open, buy to open. Okay, and then how much will the cost be? Then this is the amount that you need to pay. Okay, this is how much you need to pay. And then when you want to sell the stock, okay, you want to sell the stock, simply go to your monitor tab and then right click and then hover your mouse to close. Right click and then close. So you will look like this. Sell 10 SE at whatever price. Okay, confirm and send. Okay, look at the order description again. Sell 10. So you can see here -10. So when you are selling, you will be red color. When you buy, it is green color. So sell 10 SE to close. Okay, so this is selling your stock. Okay, so if you want to, and then the next one, sell put option. Okay, so normally when we want to sell put options, we sell monthly. Okay, sell monthly normally. Okay, so my criteria is to sell put at the money. Okay, at the money. So you want to sell put, you look on the right hand side. Okay, look at the right hand side, and then you click bid. Bid is selling put options. Okay, ask is buy put options. So we do not encourage you to buy put. We encourage you to sell put. So always look at bid. When you want to sell call option, you look at the left hand side. Okay, you can see a call. Look at bid as well. Sell, bid means sell. Okay, you want to buy call, you look at ask. Okay, ask is buy call option. Okay, so right now this we will focus on sell put first. So at the money right now 278. At the money will be 277.5. Okay, so you just click here you'll come out this page, and then normally I will want to receive higher premium. Okay, instead of receiving 13.20, I want to receive 1370. So click confirm and send. You see here. Sorry. Okay. So again, make yourself, create a habit to read your order description all the time when you trade options, okay, or even buy your stock. Order description: sell one contract of SE, okay, expiry date, and then the strike price, how much you will earn in terms of premium. So you see max profit is 1370. Your max loss 26380. What does this mean? It means that this is the money you need to prepare in case this sell put got exercised. So you might ask me, why not 27750? Okay, 277.5 times 100. Why is it not that amount? Because you receive 1370 already. So TD Ameritrade will assume that you will keep this 1370, and then in case got exercise, you need to fork out another 26380. So if you take 1370 plus 26380, it will be equal to 27750. Okay. All right. Okay, so this is sell put. So when you sell put, right, this amount, okay, after minus the commission 1369.35, it will be credited into your cash and sweep. So you will see gain, okay, instant gain when the position got filled. When the position is working, haven't got filled yet, you won't see the amount top up over here. Okay, once it's filled, you will see the amount credited here immediately, not 30 days later, immediately once it got filled. Okay, so this is sell put. Okay, and then for sell call option, okay, sell call option, one of the criteria is you must have at least 100 shares. You must have at least 100 shares. So let's say you have 100 shares of SE. You look on the left hand side and then look at bid, okay, because you want to sell call option. Okay, so when we sell call option, we want to sell 10% higher than market price. Okay, 10% higher. So for example, 10% higher than right now is 307.5. Okay, so you click here under bid. Okay, bid is sell call option. So we click here. So you want to earn more premium, right? So we just move this to here. Confirm and send. You will see here order description. Okay, sell one SE at this expiry date. Strike price 307.5. Premium you receive is 445. Okay, so when you sell call option, right, the premium that you will receive is $445. Your max loss here, they put here infinite. Don't worry, don't let this infinite word scare you, unlimited loss. It simply means that if SE trade beyond 307.5, 30 days later, you will have to sell your SE away. Sell your SE at how much? 307.5. Okay, if the stock run up to 310, you will not have that difference. Okay, the amount that you will be selling, okay, the price will be 307.5. Okay, so as long as the stock stays below 307.5, you still get to keep your stock and you keep the premium. Okay, so if the contract got exercised, you still get to keep a premium, but you will no longer see your 100 shares of SE. So what will happen? You will see SE disappear in your portfolio, and you will see 307.5 times 100. This, you will see that sum in your cash and sweep. Okay, So you see 30,000 and $750 additional in your cash and sweep. Okay, so this is sell call option. And then for lip call, okay, for lip call, one of our criteria is more than 500 days. Okay, more than 500 days. So you go to, okay, so when we want to buy lip call, right, you look at ask because we want to buy. Okay, remember, bid means sell, ask means buy. Okay, you want to buy call. So normally I will go for at the money. Okay, normally I'll go for at the money, but we also need to look at the IV and also the open interest. So you see IV 40 something, although during the 2 days class, right, I say that the IV must be less than 30, but this one is 40 something. So I am taking a little bit of risk. Okay, so I don't mind buying at 40 something implied volatility. The the percentage that I will not tolerate to buy is if it's 60 and above. 50 something, I'm still okay. But 60 and above, I will not touch. If I want to leverage, if I want to take advantage of the stock upward movement, right, I will buy the stock instead. Okay, buy the stock instead of buying lip call. Okay, so I acknowledge that I'm taking a little bit of risk by buying 40 something plus IV. And then the next thing I want to see is the open interest. Okay, open interest. So you see here 5,008, 2,900, okay, 70. Okay, so I will pick the 5.8K. So I want to buy lip call, right? So 280 is the at the money. Okay, the one that is closest to the current market price. So I just click here, and then because I want to, because lip call is to pay premium, right? So I want to pay lesser premium. Instead of paying 6,590, I want to pay 6,465. Okay, so click here, and then you'll see, okay, create a habit to read order description all the time. Buy one contract of SE, okay, the expiry date, buying call, how much I need to pay, 6,465. Okay, buy to open. So break even stop price you don't need to see because we are not planning to exercise the contract anyway. Okay, so what we want to earn is the price difference. So right now we are paying 6,400. If the stock rally, and then this premium, right, we paid the value increase to, let's say, 10,000. We want to make the difference 10,000 minus 6.4K. The difference will be our net profit. Okay, and then the for smaller portfolio size, right, I recommend you to focus more on lip call rather than sell put, because buying lip call will grow your portfolio faster. Okay, you can see here, max profit infinite. Okay, and then your max loss is the premium that you paid. Okay, the premium that you paid. So if SE is on a long-term decline, the price is not moving anywhere, your max loss is 6.4K. Okay, but to further protect your money, I will put a 50% stop loss. Okay, so to make a calculation very simple, let's say I pay $6,000. Okay, so 50% cut loss, I will sell. Okay, in reality, right, you go to your monitor tab, you right click your lip call and then click close. Okay, right click and click close, you come to this page. So sell SE. Okay, sell your call. Initially you buy call, now you want to sell your call option. So assuming you buy at $6,000, and then the 50% cut loss will be half of it, so become 30.00, and then change from limit to stop limit. Okay, and then the price will both will be 30. Okay, and then change this from standard to ask. Okay, standard to ask. Sorry, to mark. Standard to mark, and then they change to GTC. So GTC is good till cancel. Okay, this this uh this trade will be active until execute. Okay, will be active until execute. Okay, so this is how you set stop loss for your leap call. For selling put options and selling call options, I do not put stop loss. Okay, because if expire worthless, then so be it. If get exercised, so be it. Okay, because we will always fulfill the two promises. So promise what you want, promise what you can. As long as you fulfill these two golden rule, right? You don't need to put stop loss. Okay, and then for another thing, another setting, layout. Okay, your layout, you can put, okay, you just click here and then click customize. Then you can put like delta, open interest, in implied volatility, okay, intrinsic. For me, I don't want to see intrinsic, so I just remove probability out of the money. This is meaning like you sell put, how many what is the chances of the contract expire worthless. So this, they will give you that statistic as well. Okay, all right. So this is what you can do. So you choose what is important to you so that you won't have, because I'm using Surface, okay, Microsoft Surface, so it'll be quite small. So that's why it's all cramped up like that. Okay. So for example, right? Yeah. So for example, if you want the stock, if you want to sell put options, right? You want to sell put options and you want your probability out of the money to be very high. Okay. Then you can choose out of the money put option. So right now it's like 278. You can sell put at 250. Then this will give you 76.53% out of the money. Okay, so for me, I have a confidence in SE. I do not need to sell out of the money. I always sell at the money. Okay, so I have 48% chance of getting exercise, but I don't mind because I promise that I want this stock. I promise I can buy this stock. Okay, so if you are the kind of person who want your contract to expire all the time, then you choose out of the money. But of course, out of the money, your premium you receive will be lower because it's far away from the current price. Right now it's 278. You can see here 272, 270, 260, 250, so far away. So that's why your premium will be lesser because a lot of safety for you. Okay, so with this you have 76% of the money, 79% of the money, but your premium will be lower. Okay, so this is how the open how the probability of the money looks like. Okay, and what is it for? Okay, so that's all that I want to share, right? If I did not cover whatever that you want me to share, just let me know. I will just create another video for it. Okay, thank you.